All right. Happy Sunday morning or afternoon to everybody out there who's tuning in for us. Another week of Michael and Steve looking at the headlines. And this is week 11, by the way. And it's my favorite number. And I think we might take this podcast to 11 today. We'll see. Um, a couple of different opinions of the headlines this week. Maybe it's generational, maybe it's veterans versus, I don't know. We're going to get into that. But the point is like, share, set your alarms, give us some comments, let you know what you think. There really wasn't much hesitation in determining what to talk about this week because we do talk about headlines and we're going to dig into the charts as well. So I'll turn it over to Michael, and we can set the tone and see where we agree and disagree going forward here.
Sure. So we'll get started here with, again, if you were living under a rock, we had another GameStop AMC pump of 8 million that have existed so far. Everyone thought this one may be different because Roaring Kitty, the guy who kind of originally found that the GameStop was too heavily shorted before, he came back. So that created a whole bunch of news and things like that. Still hasn't done anything to verify that it's actually him, which I think is interesting, but just a lot of memes. And that, unfortunately, got a lot of people hyped up and a lot of people trapped. So just a couple things, again, right off the bat, is we were talking about a little bit last week, even before all of this craziness happened, about some of these short float stocks looking like they were getting interesting. So before Roaring Kitty came back and things really kicked off, GameStop already was popping up from about 11 to 17 or so, which is a decent little short squeeze for something that only has 24% short float or less than 1 day to cover. It's important to note that GameStop is doing many times its floats a day. So even if 100% were short, plenty of time to get out of those. Then he comes back, he tweets, I think on Sunday night it was, and then this
Yes.
roars up. The pre-market here is $80 a share, I think was its height, and then just kind of completely falls apart. That and AMC. Now, a couple things that were different this time. One, these companies, I think, learned from the last time and they were ready to go to issue more shares. AMC issued shares right away. They understand that they are losing money. They have AMC, for example, has $9 billion in debt and interest rates are no longer zero. So at some point, that's going to get refinanced at a much higher rate for a struggling company. So they're taking this opportunity to, unfortunately, sell to retailers that are FOMOing into these positions. So they are selling those shares to you as well. GameStop did that today, and that was a bit of a nail in the coffin. It was already up really high, and they issued a whole bunch of shares as well. Again, unfortunate for retail, but if the company has to do it to survive because they're a bad company and don't sell anything people want, then that's what they have to do. Another thing that's very important that's different is the hedge funds are getting actively involved in this because they saw what happened last time, right? They kind of missed the boat when it came to this. I remember actually speaking to a hedge fund manager during the first squeeze, and they had already hired this guy's nephew to go and troll Reddit to try to figure out what was next. They were already getting wise to it on squeeze number 1. So now on squeeze number 50, you better believe they had systems and processes in place. This just article from New York Post is talking about Jim Simons, rest in peace, which is he's the greatest, without a doubt, objectively the greatest hedge fund manager of all time when it comes to return, bought a whole bunch of GameStop and AMC theaters going into this rally. Again, just seeing the initial short squeeze. He's never released what it is they actually do. It's all quantitative based, but makes me think that this has something to do with short float percentage. They're looking for short float trades, which is very interesting, which is something that we are seeing as well. And again, as you can see the chart, it looks like these are going to end the same way all of the other ones end, which is nice little rally and then kind of fall apart. So the last thing I wanted to talk about is just a quote that I had on Twitter just to pat my own back that I think is very relevant for, looking at, let me see if I can find, looking at the way that I recommend. Even if Steve doesn't agree with me on all of this, that he'll agree with me on this one. I just tweeted this out, and this is picking up some steam that just says, all right, go to the meme stock party, have a few drinks, have a great time. Just have a plan to
Perfect
get home
segue.
safe when the party's over, right? So,
Perfect segue.
we are, party may be over, party may not, but we have to be able to plan for these events. We've seen it happen before. So if you're going to participate in meme stocks, again, just have a plan is all we're kind of asking here. So, all right, Steve, what do you think? Where do you
Yeah.
disagree?
So, well, no, not at all. I agree 100% there because that's exactly what I did. I'm going to walk you guys through it. I don't even know if I recalled, but on your screen there, that consolidation is right above the 200-day moving average. And I noticed that going into the weekend. And that little red spike as it came down, I said, we're going into the weekend here. I'm going to take, I'm going to say it again. What I've learned from the past is how to play these things and get in and get out. I'm going to say right off the bat, I am not an ape. I am not an
Mm-hmm.
ape. I am not a diamond hands. I do not hold this stuff. I trade it. And I've
Yep.
observed how it's done in the past. And so what I did was on Friday, going into the weekend, I saw that sideways action 5 days. And I said, I'm
So
going to
there's the
go, I'm going to
200.
take a one yeah, thanks. I'm going to take a one-third position on that Friday there. It was kind of midday. One-third doesn't hurt, and I thought this is me not reading headlines. This is me looking at the chart, saying the volume's picking up. Something's brewing here, and when things capture the 200-day and slide sideways and hold it, take notice.
Yeah,
So
there's the
go home the weekend long, one-third of my normal size. Okay, if my normal size is a 10 or 12% position, this is going to be 3 or 4%. Pleasantly enough, Sunday night, I see everything getting excited. So I say, all right, I've seen this game before. What can I do to maximize this? Because I'll tell you what, last time I traded this, I think I pulled $2 out of the jaws of 200. And I was kind of pissed off
yeah.
as a veteran trader. I thought I should have done better. So I thought, here's my chance to do better as a trader. So we're talking about trading still. Go into the week. I take the up and downs on Monday. I take the gyrations. I go, I think this thing's going to have some more steam. It's just building. And if those who've followed me before, Michael knows my favorite trade is a day and a half. I love
Yep.
a day and a half because that's when momentum seems to start to really break down because the greed in people that have participated are like, I better book this before it's gone. And that's me. So, funny story, we go home Monday night. Um, I wake up 1 in the morning. I'm in San Diego Pacific time just because I want to see how the market's open at 1 a.m. Pacific, 4 a.m. Eastern. And I'm watching this stuff crazy. And oh man, I go back to bed. I get up at 2 a.m. I come out and I see it's traded as high as $80 and it's still in the 70s. And I'm like, if I don't take half off here, I will slap myself in the morning. I literally took half profit. And I think I even mentioned to you guys, I was up at 2 a.m. taking profits on
Mm-hmm.
GameStop. That was my day and a half. I literally had to dip into the pre market. Fast forward on the remaining half, I kind of traded out of it for the rest of the day as I realized that that was pretty much it for the rest of the day. It just kind of faded. And so I haven't done a dang thing. Actually, I think I tried to play a dip the other day, but it was a paper cut, and I've just left it alone. So that being said, that's the trader in me enjoying what was, I think Michael said a moment ago, the 50th squeeze.
Yeah.
And so that brings in to my mindset about what's happening here. Again, the theme of our web podcast is to try and look beyond the headlines. And I know Michael's trying to make a lot of sense about what's going on with headlines and other reports and things like that. But there are still a lot of unknowns. And I'll say, I'm deep Generation X. I was born in '67. We're the last of the feral generation. You're probably going to start hearing more of this. I see it coming up on TikTok. But we raised ourselves. And when I got out of high school and college, I took a test for a corporation and they liked my interview, but they said there's just one thing on our personality test. You scored extremely high in questioning authority. Is there going to be a problem with that? I said, no, I need the job. But that's who I am. And so I'm still trying to figure out why, to this point, this damn stock has not gone to zero. Why do we keep getting these squeezes? Why is a stock that went from 20 to 80 so volatile? There's something that's not right, is my angle. 24% sure, that's the short float that's reported. Michael says there's no case for naked shorts. Okay, possibly. But what about swaps and dark pools and other off-site exchange things where there is no reporting? I just wonder, we don't know. Nobody knows. There's only two parties, the counterparty of each swap. And so there's a lot of speculation that goes on. I try not to get too caught up in the headlines. To stay in the theme of things, I try to read what the stock is telling us. And my only question is, why does this keep happening?
Again, my argument would just be chat rooms, right? People getting together to pump it. There's one thing that I'm interested to see about this particular one is it seems like I've heard this like 4 or 5 times. I should look it up myself. I hate just hearing other people say things and repeating it. But there is another large influencer who just beat some charges for stock manipulation, who apparently a few days before Roaring Kitty tweeted that famous picture, also tweeted the same thing. So that's interesting to me. Again, I would say I would totally agree that what's happening with GameStop is short squeezes, right? I just don't think that they are naked shorts, billions of extra shares, blah, blah, blah. And the reason I don't think that, I think there could have been a rationale being made for that initially. But if you think about it, if you took all of the shares that have taken, or all the trades on AMC, for example, so the dilution has been 15x, right? So again, if you were short 100% of the stock in AMC before, you're only short 5% now. So you've had all of the opportunity in the world to get out of that position. And then on top of that, there has been 4 years that have gone by and AMC's hitting new all-time lows. So if I am short in some sort of naked swap illegal fashion, well, the company's at all-time lows, right? I know there's all this scrutiny out there, and it's diluting shares over and over and over again. Why wouldn't I just make myself honest and cover the short at that position, right? If this thing was at all-time highs, I could see an argument for some grand conspiracy that no one has ever given a shred of evidence for in 4 years. But the fact that the shorts are right and they've had all of the time and all of the liquidity, I think I read somewhere that if the entire financial system of planet Earth, so every dollar that exists out there was short AMC, there has been enough liquidity to cover that short over the last 4 years with the company dumping. So, I'm more of an Occam's razor guy. I just think what's happening is people are betting on these awful companies to go to zero. And as a capitalist, I believe they should be allowed to do that and that these awful companies should go away.
Mhm.
And then what's happening is they're getting squeezed every now and then. So a bunch of people are getting together in a chat room. Could be another hedge fund. Like we saw that Jim Simon's Renaissance Capital bought millions of shares of GameStop before it rallied. Could be other hedge funds preying on other hedge funds. I worked in the hedge fund space for 10 years. I know that they'll try to pay off other staff members. There's hacking that tries to take place to try to find these other positions. I just think it's just going to be a cycle all the way down where shorts get a little bit ahead of their skis. Another hedge fund, a chat room, something comes along, squeeze them a bit, you get this pop. Unfortunately, then you get all the promoters who are getting paid, these YouTubers that do nothing but make videos about AMC and GME. They get everyone all hyped up. As the hedge funds are selling their positions to the apes, it crashes, and
What's
then
the
the
float?
thing
What's
happens
the
again.
float in GME? What's the tradable float they're calling it?
It needs to update. I can look what we have, but of course they're issuing way more shares. But the float's 200 million, and it
Okay,
has
so why
traded.
is okay.
Yeah, yesterday it traded
So
200 million.
okay. So why is a stock that has a float of way over 250 million or whatever at $20 one day and up 400% in 2 days? That's the kind of thing that a stock with 2 million shares of float would do. So to me, that just tells me there's a little bit of extra fear on the short side also driving these squeezes. And I
Oh
think
yeah.
in the bigger picture, what we're looking at here is an unprecedented, uncharted territory because of the apes and the diamond hands. They can't finish off the deal for whatever reason. It can't finish the deal. We just have these continued periods of lull and then a major spike. And I don't think either you or I know how it's going to end in terms of the details, but this is a war of attrition. And I don't think it's going to end anytime soon, is my point. But I'm very curious how a stock can move 400% in 2 days with a 240 million float if there's not a little bit of scaredness on the short side.
Well, so we can do the math. So say 250 million shares, 25% short. Say 50 million or so of those shares are short. They get squeezed. You have someone with, I think he's getting about 10 million impressions per tweet, comes out, that gets covered by the mainstream media. It gets perpetuated, right? I was on CNBC talking about short float, so the mainstream media is all over this. They're promoting it to people. I have my father-in-law calling me saying, "Should I buy some GameStop? Is this thing squeezing again?"
Mm-hmm.
So that gets pushed out to everyone. So you end up having these cycles where everybody buys in, and then these people don't sell when it crashes back down, and then everyone buys in again, and it crashes and so on. But the institutional ownership of GME is still high. So again, net institutions are betting for this thing to continue. Now, what I want to do is I want to differentiate two of them, because with AMC, I think we
Mm-hmm.
know how this one's going to end. Right? This has diluted its shareholders just an unfathomable amount. If it ever got back to all-time highs, it would be the largest company on earth. I think it would be, if you took the top three companies on earth and combined them, AMC would be bigger than that. So there's not enough money in America to get AMC that high. And it's losing money quarter after quarter and has unfathomable debt, right? So they're on their way to dead unless they can do something miraculously to make people go to the theaters a bunch again. GameStop's a little bit different, right? If we go to the chart here, one of the cool things we have at Trade Ideas is we have all the fundamental data. So GameStop, at least last quarter, positive earnings, right? They have 1.2 billion in cash and only 600 million in debt. Now, the fact that they are a company that's so dated, they sell physical versions of things you can download digitally, right? No, as somebody who plays video games, there is nobody out there who goes and buys a physical video game to plug into their system anymore. It just doesn't exist, right? So the sales they're making is off figurines and collectibles and things like this. But the fact that they're able to make any amount of money, to me, is way more interesting. So AMC, I think, right, this thing's done unless they can do a massive turnaround. And even if they do, the float's diluted so much that it's never getting back to prior highs. GameStop's kind of interesting because with GameStop, what you may have is a potential turnaround story, right? They've got obviously the name recognition. They're not swimming in debt. They're not hemorrhaging money hand over fist. So if something can occur where they come up with a business model that ends up pushing them out of the 1990s into the 2000, this to me is more interesting. So it also goes to, I think, a concept we can both agree on, which is just relative strength. So say you're a meme stock person and you think meme stocks are going to be the thing. Well, if you take a look at AMC's chart, again, at all-time lows, tons of liquidity. If there's billions and billions of shares out there to short or cover, they can absolutely do it. But GME never got to all-time lows, and in fact has just been kind of moving along. So it's not, I'm not going to like this company, and I'm not going to buy it when it's still in a downtrend like this. But looking at the fundamentals, looking at the relative strength, I don't think it's meme stocks are going to do this or meme stocks are going to do that. Bed Bath and Beyond went bankrupt. They're never coming back. AMC
Yep.
probably going to do the same thing. But if it looks like, if someone put a gun to my head and said you had to buy a meme stock, I'm looking at GameStop because they've got the capital and they've got the name recognition that if the CEO can figure out a way to do something to get them profitable again, it looks like they've got a little bit of runway to do it.
It's like Netflix when they used to deliver DVDs in the mail, then they all of a sudden, oh my God, streaming.
Right. So yeah,
Anyway,
I don't know what that is, right? I don't, video games. The problem is Xbox. You go to the Xbox store to download your Xbox game. PlayStation, you go to PlayStation store to download that game. I don't know what they're going to do, but again, I think it's going to be the survival of the fittest when it comes to meme stocks. Now,
well, and they're definitely the 600-pound gorilla in the game, so that's the one where all the apes are.
yeah. So But when it comes to it, if you see these squeezes happen, is the only thing. I just want to go back to my tweet because again, I'm tooting my own horn, but I do think it's proper. You need a plan to get out. Like Steve was talking about, if you're buying as this thing is rallying, if you're the guy who's buying at $80 a share in the pre-market that one day, you're doing it wrong, right? There's no the only people that I see doing that are the real conspiracy heads that think that this is going to go to $1 billion, right? If you're actually trading, and even if you believe that there are a bunch of naked shorts out there, say two times the float, say you think there's, let's say, four times the float, there's a billion shares out there that no one's ever found, and no one's, right, all the audits never brought up, and all the third party investigators never found a piece of evidence for, but say it exists. So that's a billion shares. That's four times the float. They can cover that in 3 days, right? So you need to be able to just be patient and say, eventually, I'm going to get some sort of sideways consolidation or some sort of pullback. You could use like the 10 SMA that Steve uses or something like that. Wait for your spot, pick your spot, and then if you're wrong, move on. If you're right, you'll make a bunch of money. If you're wrong, move on. Treat it like any other trade, right? So, do you have any closing thoughts on meme stocks?
Um, yes, I do. And that is being in support and also on the front lines here at Trade Ideas. When these things happen, it's actually kind of a good thing because it brings people in. I've seen more questions from new people coming in, and I know why they're coming in. The market's at all-time highs, and we've got meme stocks going again. So the good news is that brings people into the game. The bad news is a lot of times they might learn a quick lesson easily. And believe it or not, probably one of the worst things you can do as a new trader is to come in and hit a giant win like that as your very first trade, because
Yes.
then it's like a junkie. You're always going to be chasing that. It's never going to happen again. I've seen it happen to people. I can tell you stories. Michael, remind me of that story when we do the interview
Mm.
about the person who made $50,000 his first day of trading, and it was the worst thing that ever happened to him.
Yeah, they never keep it. It's the same story you hear about like the lottery winner who wins like $50 million, and then 6 months from now they're flat on their ass broke, and they don't have, right, because you don't have the skills to keep it. I think crypto did a lot of that as well, right? So, all right, now
Let's. You want? What were you going to shift to? Go
I
ahead.
was gonna go over because Steve has a story to tell about
I'm
SMR
sharing my screen.
that we
Yeah,
talked
I'm
about
sharing my
next
screen
time.
for you.
So first, I'm going to pop over here, and I'm just going to go through. So this is Iceberg Research. They're one of those notorious short-selling shops. I all you need to know is they wrote a hit piece. Uh, I'm not going to understand any of this as well. It's multiple pages long, but they wrote a hit piece on it, and Steve and myself were in it. I'm still in it, but I think Steve's going to talk a little bit more about the price action. And there, you're
Hmm.
sharing your chart now.
Okay, so again, let me preface it by reminding people that I question authority. I have nothing wrong with shorting. I've made a lot of money shorting, and I don't mind losing money as long as it's a fair fight. And if I feel like there's not a fair fight, I'm going to say something. And maybe some of you watching this were in the live room when I took over for Barry on Thursday, because there's nothing more in educational and interesting when something bad happens live and you have to work your way through it. And it became kind of an interesting situation for learning for newer traders. So let me explain a couple things. Again, Iceberg, huh? That's adorable. What an adorable name. Iceberg. Did you know this, Michael? I bet you don't know this. You know what happened right here? See my circle? You know what that
Yeah.
was?
No, that them again?
See that? Yeah, that was them. That was them at the same price level. Pretty, or actually, no, not the same price level, lower. Back in October, and they got a good 40% drubbing into that stock, Iceberg. Well, something pretty much proved them wrong. I believe I looked this up. This was the company reporting an improvement of 65% increase in their pipeline. Shorts definitely got blown out here. Come around this territory, I start to notice on the trade ideas short float scanner, this thing's got a pretty good short. And I think at one time it was 28%, then it worked itself down to around 20. And I traded it. I was positioned here and I took some off up here. Now I'm going to switch to the intraday chart as we get into yesterday's fiasco. By the way, if you're short the stock, bouncing up and riding that 50-day moving average, again, I don't read headlines, guys. I read charts. I read footprints in the sand. And if we go back a day here a little bit, that's starting to get a little scary for the shorts if they're, in this area up here, because this blue line that I've drawn, this is the area at which they shorted the first time. Now, I don't know who or what or who covered here or if they repositioned, but once we took out this line and we started to take off with 20% short, I, as a trader, caught it and I was riding it and I was happy that I was on the right side. So now we switched to the intraday yesterday. And I'm talking in the, actually, there's more than that. I'm going to switch off. I want to switch off the pre-market just so we get a clean chart here. I decided to add back in. I noticed that it was holding up really nicely. And so as a double sting, I kind of bought back in right about here, turn my back, and I go to the live session. I come up and I check my P&L and I'm down $1,000 immediately. And I'm like, wait a minute, what just happened? What's this all about? And somebody in the chat said, oh, Iceberg just came out with another hit piece. And being Barry's room, I tried my best not to curse.
You're trying to be Canadian the best you could.
Couple of them. Oh, look at this, 666. How appropriate. A couple curse words slipped out, but I said, okay, guys, we're gonna learn from this. Okay. I gave him the whole spiel about I can stand a fight, but I can't stand an unfair fight. And when the short sellers saw the price getting away from them, as it was with the high short float, one of the scenarios out there, conspiracies, whatever you want to call it, is you have friends in the media that you just pick up a phone, or you have an analyst and you just get a little word out there in a megaphone. And, maybe they got that opportunity to cover yesterday because it's bouncing nicely today. But the point was, at lows, I had already picked it up. I noticed it right here. I said, what just happened? So it set a low. And I said, okay, guys, what I'm going to do is I'm just going to continue the broadcast. I'm going to set a new stop, and I'm just going to turn my back. And then the more I thought about it, I said, this just came out. It's going to be disseminated more and more. If I ride that down to new lows, it's another $500 loss in where I am right now. I'm just going to punch out on this green spike. I took my order and I changed it to a market and I got out. And I said, I'm just going to get out, guys, because sometimes you just have to say, I have to take the loss. I can't spend the rest of my day focusing being a hoper that I would break back through right here, knowing that this would be the true test. If it bounced back up and broke through that SMA, then it was very short-lived. And I didn't want to be the one to hope that it did, because if it rolled back over, I was going to take more of a loss, and I was already really pissed off. And so I said, let's just rip the Band-Aid off and call this what it is and move on. The important thing is it allowed me to get over it quickly mentally. Trading is a mental game. If you want to sit and focus on SMR and fume and steam and try and figure out how they screwed you, you're going to miss opportunity for the remainder of the day. So I had to just kind of set an example to psychologically throw it out the window and move on from it. And I'm okay with it. Barry showed me this morning, don't look at SMR. And I said, I am. And I'm laughing, whatever. They got me, but the point is, they got me should not be market structure. It should be a fair fight. So that's why I'm a bit cynical sometimes on short sellers.
So I think the first takeaway before I've got an interesting question for you, but the first takeaway is just you cut it, you moved on, and there's nothing stopping you from getting back in, right? And that's the beauty of what we do as retail traders is just, right. You instead of trying to battle and say, hey, oh no, this guy's wrong, I'm going to double down and blah, 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 blah. And if it turns out that he's right and whatever hit piece he wrote is correct, you end up losing all your money and blah, blah. I think you did the perfect right thing, which is you take your licks, you move on with your life. But again, there's nothing wrong. There's nothing going to stop you from getting back in if that thing moves. Now, as shitty as that is for short sellers and to be able to write these reports, would you hold the same thing true for someone who we know is long GameStop, writing reports or sending memes to pump the stock? Because I have that chart right up here, and we know because he posted his positions that, right, Kitty is long, or unless he sold his positions, I guess he could have, somewhere from around here. So if you take the SMR chart and you reverse it, then he waited for him to
I
get a
hear
little
you.
bit underwater in his positions and then came back with not a report, but came back with whatever. So would you look at that if you were a short seller in GameStop being as upset as if you were long a company and a short seller came out? Because the way I look
I
at
would be
it,
hypocritical to say no. Yeah,
I
I
just
agree.
I just look
I
at it as
don't
like it should all
care.
be okay. Now, what I would
Yeah.
love to see in the regulation is that everyone has to disclose a position. And me and Steve actually
Yes.
haven't talked about this, but you will notice if you go back in our podcast, if we're talking about something that we're in, we naturally tell you that we're in it, right? And you can confirm this with me, Steve. We never sat down and said, okay, we're going to do this podcast. Let's make sure we're telling people when we're in names. We do it, and I do it every time I'm on stream. We were talking about MindMed for a bit there when we each held some, and we said, hey, we like the look of this company, blah blah blah. FYI, we own some. That I believe, if we are going to do a regulatory change for all of this when it comes to short sellers and it comes to whatever, I think the fact that we don't know until every 2 weeks what people are short in 2024 is ridiculous. I mean, that's one thing I think we can all agree on, is that there should be some way for all of the brokers to network their short interest and have that as a real-time number. I would love that, because I think there'd be so many cool trading strategies you could build off it. But I think that's part of it. And I think there should be a disclosure. If you're someone like Roaring Kitty or Iceberg, and you're talking about a company and you have a platform over, I think that Roaring Kitty guy's got, again, 10 million impressions per day. Your platform is over X. I just think there should just be disclosure requirements, right? Tell me
It'd be great
what
if we
you own,
could.
right?
It would be okay. Yeah, a couple of things. It'd be great if we could tokenize the market tomorrow and put all the shares on the blockchain.
Yes.
Then we wouldn't be having this conversation.
Yeah.
That's number one. Number two, I agree with you. I would be a hypocrite to say no. Nothing I hate more than people coming on CNBC and talking their book. Nothing I hate more than analysts talking their book or trying to corral the masses in one direction.
And they
So it
have
cuts
that they
both
have that
ways, and
thing
I'd
that
be an
says
idiot to say
that.
no.
Yeah, they have that thing on CNBC. Sorry to interrupt, but they have that thing which says the analyst may own some shares in the blah blah. It's like, no,
That's what
just
it says.
it's like just tell
It
me.
says that on
Yeah,
if you have the screenshot, they
may.
literally disclose that.
Yeah,
Please assume that Iceberg may own shares short.
yeah. It's just
I assume that
why
he did.
it's like, no. Tell me that you're short. Tell me roughly where you're short, and again, that's great. Yeah, it says right there, right?
Oh, I can
Versus
tell you where they were
may.
short. It's that blue line I had on my chart right there.
Yeah,
It's where
but
they did. It's where they hit it last October.
yeah, I would, and just right, open it up to everyone. If you're gonna go and you're gonna be a public facing, and I would be held by this, and so would Steve. But there should just be if you're talking about something and you don't just disclose it, then there's repercussions for that. So, for example, a lot of influencers will get in trouble if they're promoting something that they're sponsored by and they don't say that it's an ad, right? If I'm, saying, oh, this mouse is the best mouse for trading and blah, 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 and Logitech is paying me to say it, I have to tell you that they're paying me to say it. I think the solution to a lot of this is to put in place things like, if you're going to write a short report, you right at the top it should say, we're short this company and this is why, and this is why, blah 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 blah. And then same with like a Roaring Kitty, if he's going to come out and say GameStop and it's amazing, then tell us you're long and away you go. Because then at least, I'm one, I live by kind of a mantra is, show me the incentives and I'll show you the outcome. If I know more about what someone has to get out of saying something, then I can just make a more informed opinion on whether or not I'm going to listen. And I think it would take a lot of the teeth off these short report guys if the market goes, oh, well, they're already short and now they're releasing this report. What will happen is the guys who are right often, that whatever is wrong with whatever companies they're shorting is correct, I think they will gain credibility over time and probably still have the same effect. But if you're wrong, like what you talked about with SMR, where they were wrong there, I think that will start to maybe even have the reverse effect. So all of a sudden, these companies start putting out short reports, and they have a history of not knowing what they're talking about. And the second they say, we're short and this is why, I think they get squeezed.
Let me just, maybe we can just end with this. Maybe I'm completely wrong, but this goes all the way back to Jesse Livermore and reminiscence of a stock trader. He had a big order and to buy, and he told them to go in and sell 200,000. He said, "Well, I thought you were buying." He said, "Well, I want to create momentum in the opposite direction first." Okay, URA, CCCJ, all these uranium stocks that we didn't even get to this week that Michael and I spent a lot of time talking about last week, they're
Hmm.
taking off. Now, SMR is part of that family. So maybe, just maybe, this was somebody looking to get long because I'll leave you with this. My friend Andy, my chum, my friend Andy decided to buy and play off my pain. It's something we used to call on the trading desk. Well, listen to so and so over there. You know, this is a good level right here. Oh, I'm buying it right here. We call it playing off their pain. So he played off my pain and he bought yesterday right off that 50-day, 20-day moving average in SRM and he scalped it today. There's a million ways to do it, but we talk about headlines. We're trying to make sense of charts versus what the headlines are telling us. And oftentimes these headlines are misdirection.
Yes. No, and it's one of those things that's actually have gotten easier over time, right? There's the old saying that uh, the lie gets around the world before the truth has a chance to get its pants on. And even more so than anything else, I can put out, if I had a large enough following, I can put out a report that could be completely and utterly debunked in moments, but it's already been disseminated by a lot of these AIs that read the news and say, they're looking iceberg and this thing, so I'm going to short the stock. And by the time people figure out that it's nothing, again, you can already get stopped. But like Steve said, you have to do it. You've got to take your stop, you've got to take your lick and move on. And then if later you decide to get back in because you're of now sound mind and body and you can get back in, that's the move, right? And I always want to just tell people that that is our superpower over the hedge funds, is that Steve can take a hit, right? He can go out and he can curse on a live stream, and then he can go back in his backyard and curse a little bit more, and then sleep this weekend. And then if he still likes the stock and he still likes the setup on
They're
Monday,
trending.
he can just buy right back
Yeah,
in, right? And
they're trending.
whereas if he had held and people read that report and it was right and there is something wrong with the company and it continued to tank, well, then he's holding the bag. In this scenario, yes, he may be buying in for a slightly worse price than he sold out of, but he's alive to fight another day. And at the end of it, that's all that matters.
Yeah, in those situations, whether it's bad earnings or a report like that, sometimes it takes a couple days for complete dissemination, and I didn't want to stick around for that.
Yeah. Well, and again, just mentally, right?
Yes, mental capital.
This is what so great stock picks, who was another, he's a friend of Trade Ideas, he was a mentor of mine when I was learning to day trade. He would say this all the time. He's like, you get out, you take a walk, and then you come back and your brain's clear when you're looking at a negative, a huge negative or a huge positive P&L in your blotter. I don't care what Buddhist monk you are, your brain's not clear, right? So you got to clear the decks, you got to clear your brain, and then you can kind of reinstate things. And I think that's a good way to leave it, because there was people who were up a lot of money this week, and now there's people who are down a lot of money this week. And I'll just say, you're not going to wake up and GameStop's not going to be $1 billion a share overnight. So do whatever you need to do to clear your brain, try to think rationally, and
Hmm.
take plays based off what you're seeing in the market.
Thank God this was the best week of my year so far with that GameStop trade anyway, which it was, by the way. That was nice.
It makes the pain a little bit less when you can offset it with something that's
It
good.
did.
But
Yeah, it did.
well,
All
again,
right.
everyone, if you've stuck along this late, this is going to be the longest one we've ever done, I think, by far, 40 minutes. But it's good because there's a lot going on. There was a lot for us to talk about, and I think we did a good job covering a lot of perspectives on what's happening out there. So if you're still here, I think we've earned a like, a share, a subscribe, a retweet, whatever they do on
Chart request.
Instagram or TikTok, and chart requests. So, as always, me and Steve, you'll see us in the comments. We're replying to comments. So far, they've been overwhelmingly positive, and we like to see that. I like to have my ego stroked every now and then. So, thank you for those. But while you're in there, if you're like, hey, there's this stock that's in the news and has this headlines. I want to know what you guys think about it. Put it down below, and we'll take a look at that next week. So, thank you everyone for stopping by, and I'll see you guys all next Sunday.